Hey there, welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton is back, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence. Great to have you, the full team in the studio.
Yes. Well,
good morning.
I mean,
virtually,
somewhat in the studio. Yeah, virtually.
In the spaceship. All right, let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XVX index is trading at $43,350. Bitcoin is up almost 3% over the past 24 hours, and the CoinDesk Ether price ETX index is above that $3,000 threshold, also climbing 3% over the past 24 hours. The new DFX CoinDesk's DeFi index is at 538. DeFi, though, trailing slightly behind, about 2.8% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. All right, Lawrence, taking a look at the markets, we're seeing a bounce in Bitcoin, in ETH as well. DeFi taking a bit of it's time to catch up.
Yeah, fewer sellers than buyers right now. It's really the only way I could describe this. Which sounds nuts, but in many ways, kind of what we're seeing is that the market has a sense, and Dominic Dante did a great technical analysis thing today, and he shows that it's basically there's signals that it's oversold. Omkar Gadbolli's piece today cites that it could be some enthusiasm regarding the SEC's chairman Gary Gensler maybe warming up to the idea, or maybe calling again for more a Bitcoin futures ETF, so an ETF that's based on Bitcoin futures rather than Bitcoin cash market. That he'd be more open to it. I'm not so sure that's necessarily the case with Bitcoin right now, why the price is up so much as it might just be in the market itself, some of the more technical aspects to it. So I personally don't quite buy the enthusiasm about what the SEC may or may not do. But, hopefully I'm wrong.
You mentioned the SEC, you mentioned Gary Gensler. We're also monitoring that infrastructure bill in Congress, right, Emily?
Yeah, so we spend so much time on the show talking about the infrastructure bill and the crypto tax provision. Now it seems like the whole infrastructure bill is potentially in jeopardy. This is not because of crypto, it's because of totally different reasons. But, the market just kind of rolls on. So one of the positive sides of this is that we have not seen, it doesn't appear to be a huge impact on the crypto market at large.
All right, well, let's deep dive with our next guest into the crypto markets. The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager. All right, joining us now to discuss the crypto markets and more is Carlos Domingo, founder and CEO of Securitize, a digital asset securities firm. Welcome to the show, Carlos. So just off the bat, would like to hear your assessment of what's going on with Bitcoin. We're seeing a slight bounce. There is a narrow trading range between $40,000 to $45,000. Where do you see it headed?
Well, I think this year we saw a huge increase up to 3 or 4 months ago, and I think the latest months has been a lot of turmoil in the market, and because of regulation potentially coming, the China situation. But I think as you guys were saying, it feels like oversold now. But once all this noise disappears, I think it's going to climb back to where it was earlier this year.
All right, and you have some news. Securitize is launching Securitize Markets, looking for those investors who are overselling, I bet. And Securitize Markets is tokenized shares of private companies on a secondary marketplace. Earlier this year, you actually raised $50 million. You came onto First Mover and said those proceeds would go toward this alternative trading system where investors could trade in private capital markets recorded on a blockchain. So how did you get SEC approval? Maybe you could walk us through that process, and can retail investors access this market?
Yes, so as I mentioned last time I was here, we purchased a license that is an existing broker-dealer that on top of the broker-dealer has something called an alternative trading system, which is basically the license that allows you to trade, secondary markets for private securities. In our case, digital asset securities. So these are tokenized either shares or other type of securities that live on the blockchain and that we can efficiently trade. The SEC last year, I think it was September timeframe, announced a no action letter, explaining a way of settling these trades, what they call a 3-step process, where basically you can do the match in the ATS, where you see the bid and the ask of the person that wants to sell, the person that wants to buy, and then how you instruct, on the blockchain that these two assets, the ones representing cash, the one representing securities, they swap, right? Which is one of the advantages of the way of settling. So we basically, after we purchase the license, file what is called CMA with FINRA. It's a continuous membership application that basically tells FINRA this is the license and this is how we're going to be operating it, and these are all the different procedures, the different third parties if they send any contracts, etc. And they went through a review process which was very thorough, and in our opinion was normal. Like they wanted to make sure they understood what we were doing and how, etc. And when that process finished, and we built their platform, we basically got the approval to be able to launch. And this is what we've done this week.
So, Carlos, I met a real estate developer last night who was telling me how he wants to sell his equity in these LLCs that buy real estate. When a developer creates or buys and develops a property, they use an LLC to do it. He wants to sell equity in a tokenized market because he believes that extra liquidity would actually create a premium that he could, therefore, it would help with his valuations. Now, does he use this kind of a marketplace, or is this just more for companies with typical net income statements and not some of the more complex deals that real estate provides?
I mean, as far as he's selling tokenized securities, we can certainly deal with them. And obviously, depending on what type of exemptions for registration he follows, he will have to do certain different types of disclosures. But it's definitely doable. And I think your comment about liquidity is absolutely right? So there's a lot of studies in finance that there is always either a liquidity premium or a illiquidity discount, whatever you want to call it. That when things are illiquid, obviously have less value because there is less people purchasing them. And I think that in the crypto space, we actually see this all the time. Like if you look at what happens with collectibles in the form of NFTs, they actually go up in value once there's liquidity because a lot of people have access to buy and sell them, right? Or recently when they fractionalized an NFT went up in value versus the single NFT that has less liquidity because it's more expensive, right? So yeah, we definitely believe that that's going to be the case. Private markets has been traditionally very illiquid, and I think that the combination of the licenses we have plus the blockchain technology for digital asset securities, plus now that we have a little bit of better regulatory clarity in terms of how we can operate, will bring liquidity to those markets. Hopefully.
How much handholding do you do with somebody who has a private company or a private LLC or private whatever that they want to sell those shares onto a platform? Do you actually do that for them? Do you walk them through the process, or do you send them out to third parties to do it? Or how does that work?
We take care of everything. So we started at the beginning of the journey of the firm. We started basically with a platform that will allow somebody like this real estate developer to tokenize their shares and issue them on the blockchain and manage them. And they had to do themselves. At that point in time, we didn't have licenses, so we could just sell technology. But then in 2019, we registered with the SEC as a transfer agent. And then at that point in time, we had a license that allowed us to basically take care of those processes on behalf of an issuer that issues securities. So we can do all the investor onboarding for them, we can do all the compliance, we can issue the securities, do asset servicing, any type of corporate actions he needs to do, whatever. And then now with the new license, the broker dealer and the ATS, we can then help them sell the securities on primary, like this is the first time he sells the securities. So if the securities in tokenized form already exist, we can list them on the marketplace and do the secondary market trading. So we have the kind of end-to-end integrated experience, even for investors. When you create an account for primary with an issuer, the same Securitize ID that you create there allows you to then log in into the secondary market. So without having to go through compliance process again, resubmitting documents and etc. So yeah, we do have now, we're the only company in the space now that has the end-to-end, platform and licenses to operate.
Well, welcome back to the show. I just want to zoom out for a moment and talk a little bit about the wider regulatory environment in the United States. We fairly recently got a new SEC chair. What is your feeling just about, how the SEC is looking at the crypto space right now? Do you feel that it's getting more or less permissive or friendly than before?
Look, I mean, I guess it depends on what part of the crypto market you operate, right? Like we obviously operate in digital asset securities, which is highly regulated, and we've always followed an approach of regulation first and try to get the licenses. And that obviously has been a longer, slower journey than other companies that have decided not to take that route, right? I think that, regulators are obviously concerned about basic things, right? Investor protection, money laundering and things like that. So, thinking that many of these protocols or many of these applications that are out there, which are completely anonymous, that you don't know who you're trading with, etc., are going to continue existing that way is a bit of a wishful thinking. I think regulators everywhere will want to at least provide some degree of, KYC or AML or traceability for these transactions, which, by the way, happens on centralized exchanges already, right? Like if you go to Coinbase or you go to Kraken, you have to do KYC, and they have to know who you are, right? And we believe that actually that could translate into, let's say, DeFi protocols in a very elegant way, right? Like we have a product called Securitize ID that, you can attach wallets to an ID. We have almost 400,000 investors there. We are now issuing certificates on the blockchain that this wallet has been KYC by us, which we, as a regulated entity, can actually do it.
You say on the blockchain, which blockchain in particular, just out of curiosity, and can retail investors access the market?
Yeah, so we have integrated 3 blockchains for the time being, Ethereum, Algorand, and Avalanche. Those are the 3 that we are supporting currently. Retail investors can access the market. Whether they can trade one asset or another one does not depend on us. It depends on the asset itself. Like some assets, follow let's say a Reg D 506C, which is a process for only selling to accredited investors, and therefore we will not allow a retail investor to purchase that asset. But some other assets are have done a Reg A plus qualification, and therefore they are available for retail. So really, it does depend on the asset and the issue itself. But from our perspective, we can definitely onboard retail investors.
And finally, how liquid is this market? Because that's the problem always, right? How you